Let's turn attention to some developments within the petroleum sector. Prices of petroleum products are expected to witness a significant reduction from next week. Projections by Joy Business based on industry data and indicates that prices will drop between the margin of 4 and 6%. Let's touch base with the Chamber of Petroleum Consumers Ghana and find out if the expected drop in prices is proportionate to the level of crude price decline on the international market. We're joined by the Executive Secretary of the Chamber, Duncan Amoah. Good evening, Duncan. Welcome to Business Live. Hello, good evening, Duncan. All right, so it looks like we have not yet connected to Duncan. Duncan, good evening. Welcome to Business Live.
Emmanuel, this is Gabi. I'm on the line. I don't know if Duncan is on the other line.
Let's now talk to Gabi. Gabi Kumi is the LPG Marketers Vice President of the LPG Marketers Association. Because we also hear that LPG prices will go up or will witness a rise next week when the window of May opens. Now, Gabriel, tell us, somewhere last week or a couple of weeks ago, you assured us when the removal or when the LPG cylinder recovery margin was removed that the prices will definitely go down. Now we are expecting prices to increase according to the latest outlook. Why is it so?
Thank you very much, Ima, and good evening to your viewers. Yes, as it indicates, at the previous window, at this window actually, that's the window of 16th to 30th of April, there was a decrease in price, i.e. the cylinder recovery levy that NPA introduced on the 1st of April was subsequently removed, so there was a decrease in price. But demand for LPG globally has shut up. You know, most countries are on lockdown, and even though crude oil prices have gone down very significantly, LPG is not following suit because LPG go to the European countries and the Americas. They use a lot of LPG. I mean, there's about 90% of domestic cooking is done by with LPG. So now that we are in lockdown, you expect people to be at home. You expect people to use a lot of LPG. You expect people to use LPG to cook. And that has shut up the demand, the global demand for the product. Hence, the expected increase in the price of LPG in the next window. This is in sharp contrast to the demand, to the price of diesel and petrol. You know, there's as I said again, there's lockdown, so there's no movement of vehicles. Factories are no working. So demand for diesel and for petrol as compared to LPG has gone down.
Yeah, but Gabi, I
drive down the price of diesel and petrol in the next window.
Right, so Gabi, I thought we also were a significant producer of gas, natural gas, of course, out of which we get LPG. So why should, a sudden increase in demand gives us a problem?
Yes, the demand for LPG is basically a result of high demand for domestic consumption. LPG is, we don't use too much of LPG, but when you go to Europe and the Americas, where we import most of this product from, the price of LPG is shooting up because there's a higher demand for the product as compared to the other petroleum products.
All right. Thank you very much. Gabriel Kumi is the Vice President of the LPG Marketers Association. We also have online Duncan Amoah. He's Executive Secretary of the Chamber of Consumers, Petroleum Consumers Ghana, COPEG. Duncan, welcome to Business Live. Hello, Duncan.
Yeah, hello.
Yes, Duncan. Now, why? I mean, are you surprised that this current reduction in fuel prices that we expect, is it proportionate to the current situation on the world market where we have a significant drop in in prices of Brent crude, as well as some favorable aspects of the cedi as against the dollar here in Ghana?
Let me say good evening to you and to your viewers. it would have been our expectation that we would get fuel prices go down a little bit more than we have seen over the past 6 to 8 weeks. Fortunately for Ghanaians, however, the cedi also seemed to be doing a bit well now, although midweek last week there were some steep reductions or steep, whatever you call it, decreases in value as far as the cedi's trading to the dollar is concerned. But it's getting quite stable now, and so we would have expected a little more reductions, some 1%, 2%, 3% reduction further to bring prices to around 390, 385 per liter. But you would also talk to the importers, you talk to the oil marketing companies, and you get the understanding that demand has actually fallen so drastically due to the few lockdowns that we had, due to the fact that the economic activity has hardly picked up the way it was prior to the lockdown because of COVID-19. And so it's a mixed bag. They seem to be running a lot of costs at this point because if you are looking at demand almost down by some 30% as we speak, if you check their volumes last week, you get the understanding that a lot of them who were probably even doing 1 million in some stations today can hardly survive 600,000. What that means is that their own overhead, the fixed cost portions are going to eat them up. And so it becomes quite difficult to expect that they would go into their margins at this point and compete, which should have been the case if times were normal and then demand was at the sort of peak that it would have been. So as we speak, it's a mixed bag. If they go down, of course, we would be happy. The trotro drivers and everybody we know would be excited. But then again, you are also sometimes mindful of the fact that they are getting a certain squeeze, and then you do not want to unnecessarily heighten public expectation that it should go down necessarily, and if they don't, then it means that they are cheating the public. So it is possible. It might go down 1%, 2%, but if anybody says we are going to do 5% further reduction, I will struggle to see how that will be accommodated given the fall in demand at the local pumps currently.
I mean, moving forward in the month of June, for instance, should we expect a massive drop in prices of crude oil, especially when the benchmarks, the WTI, continues to fall and the Brent crude also continues to fall below the $20 per barrel mark?
We need to psych ourselves. You know, Corona is still ravaging across Europe. The United States is still having its own challenges. China is rebounding from the issues they had with Corona. And so once they who made up the number one consumer would get their economy back to working, it would mean only one thing, that global demand is likely to surge from the month of May. What that would also mean is that if demand should move from the 70, 75 million it is today to about 80, 85 million, it could only have one effect on pricing. It would go up. And so it is down now. And if you recall last week when we spoke, we were insisting that government make up a deliberate plan to stock up both with finished products.
Okay.
Make up a deliberate plan to revamp the thermal oil refinery and stock up crude oil, because eventually prices which today are hovering around 19 and 21, 22 for Brent, you do not expect that they will continue to stay. They may go back to the 30s region. That is for crude.
Okay.
Now, Platt, that has also dropped to the 100. You do not expect that they will stay there forever. Prior to where we are now, finished products were doing about $500, $600 per metric. they dropped to about 180, 190.
Right.
It doesn't look guaranteed to stay there forever. So we need, as a country, to plan at this point. If hedging would go for us, let's go for it at this point, because the month of May may not exactly be for all lower prices. Now that some countries are also removing the lockdown restrictions, and activities or economic activities are likely to get back to normal for some of them.
Many thanks for your perspectives there, Executive Secretary of the Chamber of Petroleum Consumers, Ghana, Duncan Amoah.